A lot of investors I partner with have one major challenge. They are busy professionals that love to create memories with their families, but are too busy to actively look and find value-add real estate that cash flows. Hey guys, I'm John Fortes, and I want to partner with you. I provide investment opportunities through apartment syndications that allow my partners to invest passively so they don't have to worry about trading more time for money. If you are interested in creating passive streams of income, wealth creation, and all the tax benefits that come along with investing through real estate, I encourage you to fill out the form at www.investwithfortes.com. Invest today so that tomorrow you can trade money for time. Once again, that's www.investwithfortes.com. And I can't wait to partner with you.
Are you a busy professional looking to diversify your portfolio? Ever wanted to passively invest in real estate but don't know where to start? John Fortes provides you with a guide to passively invest in real estate. This is the Passive Investor Show.
And now, the Passive Investor Show. Here's your host, John Fortes.
Hello, PI listeners. Thank you for lending me your time today. Welcome to the Passive Investor Show. I'm John Fortes. Our goal is to provide you, the busy professional, with passive investing tips and tricks for your real estate investments to leverage more time for you to focus on your true passions. Let's get to work. Welcome, PI listeners, to the Passive Investor Show, and I'm your host, John Fortes. And you know this because you just told at the end of the intro. So what my goal and purpose of this show is to bring passive investors information to help them strategize, to help them understand multifamily fund investing. No matter if it's their first time or they're a seasoned, savvy investor. Let's get to work. Today we're going to talk about the effects of COVID-19 and how it's affecting commercial real estate. So there's a few sectors that are being, a few divisions within commercial real estate that is being what seems like an onslaught attack as we continue to fight this virus. It's the retail and office space, restaurants and triple nets. All those type of commercial investments are really seeing an attack going through our economy with this virus spreading. So retailers can't get to work to sell merchandise. Offices can't get to work because of stay-at-home orders. Restaurants are only doing takeout, if that. And other triple net is, no one can get to work. So I would couple that in with the offices as well. So, but what do we do? What do we do? How do we go about it right now? So unfortunately, we're going to have to wait a little bit more because things are changing by the day to sometimes by the hour. And you'll understand where I'm going as we drill down deeper in this. And we'll start off with the financing piece of this. But where does that leave us after we get ahead of it all? Unfortunately, there are going to be some losers in this. And that's the sucky part. We're going to have people that started a restaurant and lost it all, or put their life savings into a business and lost it all. And that's the unfortunate part. And then there's going to be the opportunities where maybe someone is willing to sell an asset for, I don't know what the prices are going to look like. But we're just kind of in a holding pattern right now. The whole world seems to be. So there's going to be opportunities that come on board from people looking to sell. And then there's going to be unfortunate situations from people that can no longer keep going with their business. So let's dive into the financing aspect of it. We all know that capital is everything. So we live in a world where cash is king. Capital dictates the rules, controls the deal, and obviously it's the loudest voice in any transaction. So we haven't really peaked to truly have understood the full meaning of what's going on. But the financing aspect is, things might be shorter terms with higher interest. So with multifamily, just to give you a little peek of what's going on with the multifamily landscape, it's different now because the reserve requirements and the spread has changed significantly. Capital is less available for a lot of borrowers, and a lot of the assets on top of that. And for financing, for lenders to give you any capital right now, if you're looking for debt, they are literally drilling down and looking at market by market, asset by asset, to determine which assets they're gonna lend to and which ones they're gonna pass on. As far as that, though, it goes deeper. They're clearly doing even more work on the sponsors, the operators, the borrower. They want to know who they're giving the debt to if they have the experience and the know-how. And then the tenants and their finances, they're drilling down that far in most cases. So your market, your MSA is everything. If you are in a retail infested area, you might have trouble getting some good terms, is basically to put it bluntly at these times right now, because they can't look forward just yet. So by the time you hear this, we'll probably be all done with it. Maybe you hear this in the future, we're all done with it, and it might be a little blip on the radar. But at this time right now of recording, lenders cannot see forward and don't want to wager on that right now because they want to see how it shakes out as well. So their requirements got a little bit tougher. So there are reserve requirements. You're going to have to bring more capital to the deal. You're going to have to raise more money. So there's net worth requirements, and then down payment requirements. So everything is the same, but numbers got a little bit increased. The numbers increased. So it got a little bit tougher for people that can't raise as much or can't fund as much. So they're going to have to bring more to the table. So how do we take advantage, or I wouldn't say take advantage of, how do we prime ourselves right now? Right now, we have to shore up our balance sheet. We have to raise capital. We have to be prepared to leverage our strengths for any upcoming opportunity. What does that mean? Put yourself in a position that you can be a partner that can contribute something. Maybe it's your balance sheet. Maybe it's your capital. Maybe you can bring something to a deal that allows you to be into the deal. But if you're just a passive investor, what are you going to do? That was the operator side. The passive investor right now literally has to make a decision. Am I going to hold tight and let it play out? And to be honest, in all investing experience, and this is across the board with stocks and real estate, sitting on the sidelines and letting it play out is probably the worst case scenario, because for you, maybe at the end of all this, you jump in at a time where you could have really capitalized when we don't know where the bottom is, but you got to trust yourself. So maybe you jump in a little bit later and you don't make as much as you originally thought, because of the fact that you're hearing other people getting this. And now when you finally decide to go in maybe a year, 2 years later, the returns ain't that good anymore. And that's what happens as the market starts to reset itself. There's going to be years. We went through a 10-year run where investors literally ate a lot. I'm going to use the term ate a lot. They thrived. They made a lot. They received great returns. But what do you do now? Do you just stop, put it on hold, pause? Let's pause that right now. I'll tell you what, your 401k ain't pausing. It's probably dropping if you're still having liquidated. I'm not saying take everything out of your 401k. I'm just comparing it to that. So I just have to throw that disclaimer out. I'm not a 401k guy, but I know enough to be dangerous. I'm not a CPA guy. I call my accountant every time. So with that said, I'm pretty savvy with my investments. If I find an opportunity and I can do it right now, I do it. I don't let the market tell me. If the deal pencils out right and the returns are there, I do it. So as a passive investor, you got to have the same confidence you would have when you originally started investing. Does that make sense? You can't just pull back now and say, all right, let me just see where we're going. Yeah, it's cool for a month. You can do that. But at the end of the day, you got to have the confidence to be able to understand when and when not to. When you want to hold back, when you want to go forward. But at the end of the day, you got here for a reason and you have a goal. Your goal is retire right. Live a lifestyle that you designed by design. Share so many memories with your family. Enjoy your families more. Enjoy your family a little bit more. And doing the hobbies you truly want to do. That's all the stuff that resonates with me. And I know it resonates with many of you. So why stop investing? Keep going. I'm not saying invest in the next opportunity, but when you're ready to invest, you invest. That's the state of mind of a strong passive investor. And I'll bring you back to who I call the greatest passive investor of all time. It's Warren Buffett. Warren Buffett is ready to pounce. He's looking at opportunities. Granted, it's the stock market, but he has the mindset to be fearful when others are greedy and greedy when others are fearful. So if you're scared now, understand it might be a good opportunity. And if others are really, really, really happy and being greedy, pull back a little bit. All right, let's ride this wave, the last investment of the last wave. We'll sit out. Does that make sense? At the end of the day, everyone, I just want to show you the situation of what COVID-19 is doing to commercial landscape right now. I gave you the point of view from the GP side, and I just gave you the point of view from the passive investor side. As a passive investor, I have the heart of a passive investor. My goal is to make sure I can go and do the things I love to do in this life and be able to say, I lived a full life. I didn't have to stop anything. I didn't have to put anything on pause. I didn't have to wait. End of the day, I invest to free up my freedom to be able to go and say, yes, I want to do that. No, I don't want to do that. That sounds like a beautiful life. PI listeners, thank you for joining. Thank you for listening. I hope this resonated with you. Please leave a review. It would mean the world to me. Reach out to me if you have any questions. And I'd like to take this time right now. I know we're all hunkered down in our homes. hope you're doing well. I should have led with this. I'm sorry. My apologies. I hope you're not driving yourself crazy. I hope you're really enjoying your family time, because I'm a pig in mud right now because I'm spending so much time with my family. And we're doing some de-stress things that help us so we don't get cabin fever and we've run out of ideas, basically. But use this time to call someone that you've been meaning to call, you've always wanted to call, start a new relationship, say hi, old friend, new friend, colleague. Use this time, because I bet you right now, whoever picks up on the other end of the line, is going to be grateful that you called. It's just the type of timing it is right now. So, PI listeners, I appreciate you. Have a great one. God bless. PI listeners, I'm grateful for your time and I appreciate you for listening. For more information, go to passiveinvestorshow.com. If any of this resonates with you, please subscribe and leave a review. The more you know, the more we grow. Thank you for tuning in. Till next time.